details to reconcile the account. So first of all, you would, for existing companies, print all hard copy reports of balances as of the start date. Now, this would include things like trial balance sheet, accounts receivable detail, accounts payable detail, bank and credit card reconciliation reports for the last month, up to and including the start date. So now we have to enter the balance in each balance sheet account as of the start date. Please note that this does not include accounts receivable, accounts payable, stock, and any bank or credit card accounts, as that would be treated differently. What we would do is post the difference in debits and credits to the share capital account. This is the clearing account that would be used to offset SF entries. So what I need to do is create a journal entry. To create a journal entry, I would go to Company, select Make General Journal Entries, and then I would enter in my journal entry here. So let me give you an example for my business. I'm going to enter in my motor vehicle, which is a fixed asset, and the debit, 20,000. I then need to enter in the accumulated depreciation, which in this case, 12,000. Now I also need to add in a loan account for this vehicle. So for this, I use the drop-down arrow. You'll notice that my loan account hasn't been included. So what I need to do is select Add New. I would then choose the loan option and click Continue. I then need to add in vehicle loan, and I can type that here. I can then select Save and Close. And when I go back to the journal entry, you'll see that I have the credit of £8,000. At this point, I would then press Save and Close. And that will enter in my journal entry there. Now at this point, you may want to go and have a look at your trial balance on QuickBooks to see how this information has been entered. So to do this, I would go to Reports, I would go to Accountant and Taxes, and then I select Trial Balance. And what I can do is just change the date range here so it shows all my information. And as you can see, that information has been entered there for me. Let's now enter an opening balance for accounts receivable. I'm going to come away from my trial balance. Now from my accounts receivable printout, I need to enter the amount each customer owed as of the start date. I would recommend you enter in an invoice for each outstanding invoice that is owed. These invoices will need to be properly dated and numbered. So therefore, I'm going to select Invoice. I'm going to create an invoice there. Now, as I explained, I need to fill in the details. I'm going to choose my customer. I can then change the date and invoice number specific to this invoice. What I would then do, however, is I need to add in an item called Opening Balance. Now, to do this, I'd use the drop-down arrow and select Add New. I select Service, and in the item name, I type in Opening Balance. In the description, I can enter in Opening Balance, and I can then put in the amount of this invoice, which is £5,000. What I can then do is choose the appropriate sales VAT code, which in this case would be no tax. I'm going to choose EBZ. What I then need to do is choose the account, and remember I need to link this to the share capital account. So I use the drop-down arrow and choose Share Capital Account. Remember that each invoice will not require any additional details on what was sold. Remember though, I need to post the entire outstanding amount and ensure that I use a code that results in no tax. Once I'm happy with this invoice, I would then press Save and Close, and that invoice is entered into QuickBooks. What I can then do is go back to my trial balance on QuickBooks by selecting Reports, Accountants and Taxes, and then select Trial Balance. If I change the date range again, once again, you can see how that information has been entered there for me. Now, you can also enter this information by editing the total balance for each customer in the customer list or a journal entry. This, however, will lose detail in relation to exactly what invoice customers paid or not paid, and will make it difficult to receive a payment against the invoice. For this reason, we do not recommend that you set up accounts receivable or accounts payable by doing lump sum journal entries. So we've had a look there at entering account opening balances for accounts receivable by entering individual invoices that make up the overall summary opening balance. The debits were all coded to accounts receivable, while the credits went to the share capital account by the use of the special item we created for open invoices. Let's now have a look at accounts payable. This is a similar process. However, rather than use invoices, we would select bills. In this example, I selected bills. Once again, I would choose my supplier. And what I can then do is go down to items, and I can choose my item called opening balance. I can then change the amount so it's specific to this supplier. And once again, I can ensure that all the numbers and dates agree according to the original bills. And once again, post them to the share capital account. I can then press Save and Close. Once again, I can go back to my trial balance on QuickBooks to see how this information has been entered. I can select Reports, I can go to Accountant and Taxes, and then I can press Trial Balance. Once again, if I amend the date range, all, you can see how that information has been entered there for me. Once again, I can also enter this information by editing the total balance for each supplier in the supplier list or by journal entry. This, however, will lose detail in relation to exactly what bills are paid or not paid. It also makes it very difficult to pay those bills, so for this reason we do not recommend entering account payable as a lump sum journal entry. So we've had a look at entering an opening balance for accounts payable by entering the individual supplier bills that make up the overall summary opening balance. The debits were all coded to the share capital account, while the credits went to the accounts payable account by the use of the special item we created, the opening invoicing and bills. I also need to add in opening balances for my stock items. I would therefore go to stock items and then enter the stock count of each item as of the financial year end date. So to do this, I would select items and services. I would then go down to the bottom left and select item and then select new. I would then choose my type, and for this example, I'm going to choose stock part. And what I can then do is add in the name of my stock item. So for today, it is the widget, the description, widget as well. I can then enter in how much I pay for them at cost price, and once again how much I sell them at sale price there. I can amend the VAT code if applicable. Once again, I need to choose the appropriate income account. I'm going to choose sales income today. What I can then do is I can advise QuickBooks how